We're just going to jump right in. Hello, everybody. Welcome. Welcome. It is officially July 1st, 2022, which means officially half of 2022 is over. So you got 6 months left in order to make 2022 even better than it has been, or for some of you, turn the ship around, etc. So, just kind of think about that as you are going into your July 4th weekend. We are here to talk with one of our favorite guests, Camari Ellis, the Philly tax team. He is a financial advisor. He helps with taxes, but all around, he's Mr. Money. And the last time he was here, he talked, someone had asked him about iBonds, and he said he thought it was great. And there was some news about iBonds. So Tawana said, you know what, let's get Camari in. And Camari said, not only can he talk about iBonds, but he could talk about other low risk investments as well. So with that, I'm going to kind of toss it over to you. First of all, we have so many new people within the 10K Project, Camari. If you would give people like a brief Reader's Digest version about who you are.
Sure. Well, thank you all. Thanks to the 10K Project for inviting me back. I'm Camari Ellis. Many people know me as the Finance Rebel. You can find me at the Finance Rebel across all of media. My whole aim and goal and mission is trying to raise the financial IQs of people so they can take control of their money. So I'm always talking about taxes because taxes is a big thing. I'm talking about investments. I've worked in all of those disciplines, from tax accountant to financial advisor to actual institutional money manager, which means I was just the guy on Wall Street buying and selling stocks and bonds for my clients. So I've kind of seen a lot. So I try to share a lot and, help people find the right way. Because there's a lot of bad stuff floating around out there. I'll just say that. But we were talking about iBonds. I've been talking about them for a while. Now they're getting hot. People are having a hard time buying them. Even I tried to get on to Treasury Direct, the governmental department or governmental website, right before this broadcast to see if I could buy some, and it wouldn't process. So people are having problems buying them online. People are having problems buying them in the bank. So they are definitely hot. Right now, iBonds are paying 9.62%. Your average bank account is paying 0.5%, sometimes less, give or take. So it's really a no-brainer. It's low risk, where you're going to get almost 10% rate of return, and you don't have to risk anything, right? You don't have to worry about losing any of your money. So people are really, really hot to try about it right now.
All right. Well, why don't we start from the beginning?
Okay.
What is an iBond? Never heard of it before. What are we talking about here?
So an iBond is a product that the United States government creates for its constituents, for its citizens. And an iBond is an inflation bond. So it has two components that it gives to citizens to invest in. You can invest in up to $10,000 a year individually. Now, if you have a spouse, your spouse can also invest another $10,000 together. So that would be $20,000. And if you have, let's say, a business, LLC, corporation, something like that, you could also invest another $10,000 under your business as well. But again, a lot of people like them because they are risk-free. You can put money into it by either buying through the website or going into a bank. Some people like to use their tax refunds to buy them because you can do that as well. But that's basically what an iBond is. A lot of people kind of mix and match what iBonds are kind of confused what iBonds are because it says bonds and sort of thinking about the overall bond market. You can't trade these. They're for you. You can't sell them off or anything like that. They're for you. They don't trade in the overall market. And, it's low risk money, low purchase value. So it's not the big bonds like when you hear people talk about 10-year yields, 5-year yields, 30-year bonds, things like that. So this is separate. If you think about Nana and my mom back in the day, they got you those E-bonds or those series E-bonds anytime you graduated. they're kind of the next generation of those.
All right, so then let's kind of get into the nitty gritty here. So you said that they adjust with inflation. So does that mean when inflation goes down, the interest rate goes down? Like, walk us through just a little bit more about how they work.
So they reset every 6 months.
Mhm.
They gotta have two components, and I don't want to get too nerdy and too technical, but they have like this fixed rate component, and then they have this inflation rate component. So it will fluctuate, but once you buy them, I want to make sure I get this right because I'm going to go directly to the site and quote it. But once you buy them, it's locked in. The interest rate is locked in.
For the
For the
entirety of you owning it?
Yes,
Okay.
but I want to fact check myself because I'm a big stickler about putting out bad information
Yes, sir.
to these social medias and all around the world because people will grab stuff and they'll just run with it.
Yeah, and Opal is asking what site are you going to? So if you can let us know what site you're going to fact check yourself, that would be
Yes.
great.
So listen, y'all can help me fact check myself. So you can go to treasurydirect.com. I will put it in the chat. I think I can put it in the chat. Treasurydirect.com. That is a governmental site that has not been updated since 2002. And they're having all kinds of problems. And the government is expecting that they won't be able to update it for the next 6 to 9 months. And if we're talking in government years, kind of like dog years, it's probably like 2 to 5 years.
So I'm going to share my screen here. It's treasurydirect.gov, everybody. You said .com, Camari. So
I'm sorry.
make sure everyone knows treasurydirect.gov is here. So, all righty then. So this is the website here, and we are able to look at all of this information here about iBonds, how to buy them, the interest rates, the tax FAQs. So I guess we would look at a general FAQ in order to find out how
Yes.
often the interest rates. Maybe we just look at the interest rates and see if they've changed any. So the initial interest rate on the new series is 9.62, and you can buy iBonds at that rate through October 2022.
Right.
And then we were asking, does it stay at that rate forever? So
I'm almost certain because they go off about 30 years.
If you buy an iBond on July 1st, that 9.62 would be applied through December 22nd. Interest is compounded semi-annually. It kind of makes it sound like it does change though.
It does. I just read it. It changes. Yeah. So the variable inflation rate will change with inflation, and they calculate that every 6 months. So that is correct.
Okay, and it says here you can only purchase up to $10,000 in electronic iBonds each calendar year, everybody. If you buy iBonds exceeding that limit, they're going to process a refund. Y'all know how the government is about its refunds. So who knows when you'll get your money, but you won't be getting interest on it while they're holding on to it. So
one quick note. You can buy 10,000 for each individual, right? So again, if you're a husband and wife, or husband and husband, or wife and wife these days, 10,000 for you, 10,000 for your spouse. You can buy 10,000 in a business that you own and operate as well.
Can you buy 10,000 for kids, or is it 18 and up?
Now you can buy for kids too.
Okay, so if it's me, husband, and 2 kids, then we really could have this 40,000 in there for the year.
Yes.
And it's each calendar year as well. So you're able to buy $10,000 a year. The other thing is, everybody, we've talked consistently about your family banks. So what Camari is saying is this could be something that you use within your family banks as well.
Absolutely.
And if anyone doesn't know what I'm talking about when I say family banks, go to the Knowledge Center. The very first thing you will see is how to start your family bank and family investment club. And you're able to go through, we had 8 sessions where we went in depth with regards to how to set up your family bank. So, so first of all, I have to admit I mean, I'm not an expert in finance, but as much as I think I know, I had never heard of iBonds before. So I'm very grateful that you had even mentioned them with regards to this. So, oh, and you put the website just for hosts and panelists. So I'm going to put it here for everybody
Oh, I'm
and
sorry.
make sure that, no, don't be sorry. And also make sure we have it in YouTube as well. So, um, so when you had mentioned that that we can't trade them, let's say, you know, 'cause, you know, we Black, sometimes we need our money back, right? sooner than we expect. Something happens. Do we sell them back to the government, or is there any way, or is it like an illiquid asset?
It's liquid. So I would say, I'm going to say this, but
Uh-huh.
I got your point, and we all know how that goes. But this should be for money that you don't need in the next year.
Mhm.
Like, make sure you don't need it in the next year, but you can get it back. But again, I would warn against needing, or I would warn against trying to liquidate it in the next year, because everything is so backed up with the government on the
Mhm.
website, at the banks. So, you know, again, if it's money you need or you think you might need, keep it liquid, keep it in cash. Um, but yes, you can redeem them within a year. You can redeem
Okay.
them. You might experience a penalty, but you won't experience a penalty of the capital. I mean, of the principal. You will experience a penalty of the interest rates that you get. And I know on one of these sites, it says, all right, iBonds earn interest for 30 years unless you cash them first. You can cash them after 1 year, but if you cash them before 5 years, you lose the previous 3 months of interest. For example, if you cash an iBond after 18 months, you get the first 15 months of interest. So again, no loss of principal, but potentially loss of interest if you need to cash them out in advance.
Yeah. I also want to show this to people as well, because we talked about the maximum being 10,000, but it looks like electronically, the minimum purchase is $25.
Yep.
So you could technically make this a part of your, not financial advice, everybody. This is just me saying, making a statement. Some people will look at something like this and say, hey, you know what? I'm going to put $25 a month into this. And yeah, you may not put in a whole $10,000 at once, but over time, you may get to a point where you have that amount of money in something like this if you chose to do that.
Right.
And then it would be, I think they call it laddering as well, where I know with CDs, they're like CD laddering that you do where you will have your CDs. You will have like multiple CDs in a bank, and then you will set it up where the expiration date happens at different times. So you're always kind of able to get money in and out of the CDs. Even though these are 30 years, these iBonds are technically 30 years. So it's kind of like something you're in the long, use it for the long term.
So it's kind of like laddering, but not laddering. So laddering, you're right. You could have different maturity dates, also sometimes different interest rates. Um, so it is like that, but
Mhm.
for at least 6 months, you'll be getting the same interest rate. However, the penalty dates will extend for each time that you buy. But I
Okay.
mean, think about
Yes.
it.
Yes.
But
Yeah.
but think about it. 10 grand a month. I mean, 10 grand each year is about
Mhm.
$800 a month, or
Mhm.
$850 a month. A lot of us could do that, right? And so
Yeah.
instead of your money just sitting in the bank getting nothing, you can get 10% for right now. And I'm rounding up, everybody. So just for me speaking it quickly and
Right.
clearly.
Right. Now, there's a couple of things that people are saying in here. So Charles is saying 9% pretty good. What's easier than that? And Charles is also saying, silly me has 15K just sitting in a bank account with 0.35%, shaking my head. So,
Yep.
one of the things that Camari said, and we should repeat it here, because I want to also repeat it for Dr. Virginia as well, is iBonds are 30 years is what you said, right, Camari?
They will last for 30 years. They will pay interest for 30 years.
They last for 30 years. They don't pay interest for 30 years, but there is some, you don't receive all of your interest if you get your money out within the first 5 years.
Yes, yes. You lose 3 months, you get a 3-month interest penalty.
You get a 3-month interest penalty. So
Yes.
you kind of, with the 15K, you kind of want to make sure that you still have your emergency fund and all of that. But that doesn't mean that the minimum is $25. So maybe if you say, hey, I just want to get into this, as like I did with crypto when I first got started, I'm going to take, $100 and just figure out how to buy Bitcoin. And I'm not saying buy Bitcoin. I'm saying that was my mentality at the time. I didn't care if I lost it or not. I really just wanted to get the practice of doing it. And sometimes that's what we need as well. And I like the fact that it's $25 is super low, where you can just kind of practice
Right.
getting into that as an asset class.
But to Charles, right, he brings up a point that I didn't think about to mention, right? So you can buy 10,000 in electronic bonds,
Mhm.
and you can buy 5,000 in paper. So you literally could buy 15,000
Okay.
together, but you have to buy it in paper, and that's a bit tedious. But you can do it. You can do it.
Yeah. Now, Mark is asking to clarify, you earn interest for total 30 years? Question mark?
Yeah, I'm going just to, because again, here it says iBonds earn. Yeah, it says that iBonds earn interest for 30 years unless you cash them first.
Okay.
And actually though, but this is a good point to talk about real quick to touch on. So a lot of our nanas and grandparents and pop-pops have e-bonds or EE bonds, and they were paper, and sometimes they're, under the mattress somewhere or in a coffee can somewhere, and they will stop earning interest. I mean, I've had several clients who've had paper e-bonds and EE bonds going back to the 50s and 60s,
Mhm.
and they stopped earning interest. And so they're just kind of sitting around. So, check in with some of your folks just to make sure that those old EE bonds are, still being active, still making that money work for them, because some of them won't. And I know that's, when I talk about iBonds, we're talking about the predecessor of the iBond, which was the EE and the E-bond. So, be thoughtful about that.
Yeah, that's really great advice. Bernard is saying, at this rate, having 5,000 or 10,000 in the bank earns you very little, yet the bank makes much money loaning your money and investing it elsewhere. Ding, 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 ding. Precisely.
Yeah.
Capitalism. This is why the richest man in Babylon, suggests you be the bank.
Make slaves out of your money.
Yeah. Mark is saying, is one version of, I guess, are paper bonds better than electronic bonds, is what he's asking.
It's really preference. I would rather have electronic, only because I'm always fearful that there might be a fire, home invasion, them lost, shredded, the dog ate them for some reason. But I have a friend actually, because we worked this strategy out. He's going to buy 10 electronic, and he's going to buy 5 in paper. And so I told him to get a safe deposit box. So I still believe that. I know we're in the electronic world, everything's up in the cloud, but I still believe we should have some things in a safe deposit box: wills, life insurance contracts, some deeds, things like that, and also have them up in the cloud somewhere. But I'm talking about those original copies.
If you decide not to do a safe deposit box, at least a fireproof safe, a very, very well made one.
No, but they have high, I know they have high heat ratings, but I know some fires get really, really hot, and it can still, I want to say smoke damage. Don't quote me on that, but it's like smoke damage on some of the things in there. But yes, if you don't want it, then yes, you can definitely get a good safe.
Yeah. So Dr. Virginia is saying, OMG, I had Series EE bonds. Latrice is saying, is it just me or does the share screen look black? Well, we're not sharing anymore, Latrice. So let me know if you're still having a problem. Opal is saying that's the goal of the commercial bank. Yes, to own our own bank. Yeah. Dr. Virginia is saying that is a great book, Cherie. Yeah, you know what? We're going to do The Richest Man in Babylon. Y'all know that we're going to do like a series of book club thingies, and I will add The Richest Man in Babylon to the list here. Yep, I believe in the safe deposit and the home safe, LOL. So yeah, so how do we go about buying an iBond? Do we come to treasurydirect.gov if we want electronic?
Yeah, you can go to treasurydirect.gov. Again, I tried to buy one just before I got on here, just to because I haven't been through the process in a while. I have some, but I haven't looked at them in a while, and I know I have some for my kids. But there's a link on there that says buy, and then it takes you through the process of doing it. Sorry about that. I got distracted.
That's okay.
Yeah, there's a process on there to buy them and then redeem them. You have to set up the account. They want to know your bank account information and everything else.
Oh, they even have on here, this is in their FAQs, everybody. I don't know if I would do it like this, but they even have on here a way for you to set up your payroll to direct deposit every time you get paid.
Yep.
So,
I probably wouldn't do that either.
I don't know if I would do that, but they're offering it as an option here. I mean, our good friend Talana, if she were here, she would really suggest that you read every page, every line on treasurydirect.gov and, make sure that you know what you're getting into, how you do things, when you can get out, etc. So, you're able to participate in this if this is something that you decide to do. Do we have are there other things that we should know about the iBonds, Camari?
I think that's the most of it, right? That's the meat of it all. Okay. But again, I would think about it like you mentioned earlier. If it's money that you don't need and you won't need in the next year, I think we have to really go back to some basic financial planning principles. We're kind of living in a wild, wild west right now in terms of financial advice. Again, this show is for entertainment and educational purposes only. But some of the stuff isn't sound advice, and a lot of times we get whisked away in the emotions of the stock market. Like right now, everybody's panicking that the market's falling, crypto's down, stocks are down. There's a fear of recession. There's a fear of laying off, things like that. Cash is not trash. I know a lot of people say that because of inflation, but here's the thing. Cash, really having a good amount of cash can be very, very powerful. But again, you want to make sure, in my opinion, and from my financial opinion, you should try to have about a year's worth of income, not expenses, but a year's worth of income in cash. Now, that doesn't mean you have a big pile of cash in your room or in the closet or under your mattress, but you can start deploying that cash into things like iBonds. You can start deploying that cash into things like tips. That's another government-backed thing that you can get into if you have more than $10,000. Let's say you got $100,000. So you can buy, what I call some ETF tips. I did a whole video on that as well. Low safe investments that can still keep your money outpacing inflation, but does not give you the same level of risk as the stock market or crypto, for example.
Okay. So, and we're going to come back to that because we want to learn a little bit more about that.
And let me say this. Let me just say this real quick. The reason why, because you hear people say 3 months of expenses, 6 months of expenses. My rationale has always been, and I've been saying this for years, your average job, if you're switching jobs, it normally takes about 9 months to switch. Instead of saying 3/4 of a year, I just say a year, because you never know what's going to happen. And then the pandemic hit. So there were some people who were out of work and still out of work. Some people are back to work now, but there are a lot of people who were really, really nervous, and they had a lot of anxiety about what they were going to do. And then they started to freak out. But if you have the cash there, your mental health will be a lot more stable. Yeah. If you know, all right, I have a good cushion, I have a good foundation.
Yeah, I do think that it's important for anybody to kind of sit down and, whether it's with a financial coach, a financial planner that you trust, because Camari and I had this conversation last time, or with your family or just by yourself, to write down your income, your expenses, your assets, divided into which assets are liquid, meaning if you have to go and cash them out, you can, and which ones are illiquid, meaning that you can't really touch them, and then all the debt you have, and getting a really good financial picture of where you are, because Absolutely. Sometimes it makes more sense to pay off certain debts, versus investing in a specific thing. So everybody has their own financial picture, and if you feel comfortable doing it yourself, that's one thing. But if you feel like you need assistance, going to see Camari, or that we have our partnership with Freeman Capital, so you all can get the 6 months of financial planning and financial coaching with Freeman Capital. So somebody here, Opal is saying, Camari mentioned tips the last time he was here. So we're going to go like a lot more, well, not a lot more in depth, but a little bit more in depth today about that. We'll go to the website and we'll look there as well. And then Opal's also saying, I asked my brokerage and they gave me about 2 seconds worth of info on it, shaking my head. They may be because they didn't know that much about it. So
they don't sell it. They don't make any money off of it.
They don't make any money off of it. Exactly. So Charles is saying, let's go. So I think that all of us are able to kind of maneuver throughout this recessionary time that is happening, the market crash, et cetera. The other thing that I will say is consider investing. If you're thinking of switching jobs, or you've been having a hard time getting another job, I know it's a bit of an investment, but consider investing in a resume writer. I've been speaking to a few lately, and some of them are really good with knowing how to set up your resume and more importantly, your LinkedIn, so that the recruiters find you.
That's good advice.
I'm sorry?
That's great advice.
Yeah. I mean, the ones that I'm seeing, I priced it out for somebody. They're anywhere from $500 to $800 for a really good one, but they'll do your resume and your LinkedIn and talk about your personal branding. And it really does help you accelerate the process. And if you're looking to change careers, transition from one career to another. I was speaking with one woman who helped a woman move from Home Depot paint department into a tech corporation in their sales department. And she was able to translate the skills that she got from Home Depot working part-time into a full-time job in a tech company. So, these are the types of things, if you've got money, like Camari is saying, and you're thinking, hey, I want to switch careers, I want to switch jobs, etc. To me, some of those are the best investments you can make, because if you're making 80 now, and that person helps you get, for $800 helps you bump up your pay by 20K, I mean, that's great return on investment right there. So yeah.
I'll say this, I know this might be a little bit off topic, but just piggybacking off what you said. We're not seeing any of the financial gurus talk about getting jobs, right? Everybody's job shaming, everybody's talking about crypto, everybody's talking about stock. Mm-hmm. But one of the best ways to get to wealth is by having a good job. Mm-hmm. And nobody wants to talk about that, or at least to learn some of the basic things that will help you operate your business successfully. Why not get paid on somebody else's dime, stack some bread, get a 401k, get some company benefits, all at the same time. We could all walk and chew bubblegum at the same time. So I'm glad you brought that up.
I agree with that. I agree with that. So Opal is saying, I am glued to the screen. My eyes are glued to the screen. So let's then talk about tips. So first of all, what is that? Reintroduce it to us and tell us, other information about it, please.
So tips are Treasury inflation protected bonds. TIP, Treasury Inflation Protected Bonds. So tips they reset, they are sold by the government, and they are sold in the big market. So these products you can kind of buy through your brokerage account. Now, in the matter and the context in which I'm talking about tips, I'm talking about buying them using what's called ETFs or exchange traded funds. So yes, they're there as well also. But I'm talking about buying them because this is for the bigger amounts. But wow.
Sorry. Okay.
No. You can no. This is good though. This is a good primer, right? Because you can buy tips on the Treasury Direct Department, and they keep track now. What is the maximum? Is there a maximum? 5 million. So wow. Okay, yeah, you can get 5 million. Now, some of my clients, some of my friends were looking at ways to use their brokerage accounts because you can't buy iBonds through your brokerage account, but you can get tips through an ETF. Again, ETF stands for exchange traded funds. What are exchange traded funds, right? They're just a basket of securities. It could be a basket of stocks. It could be a basket of bonds, and you can buy them directly through your brokerage account. So if you have more than, the 10,000 that Treasury Direct is allowing you to buy iBonds, that is another alternative for you as well.
Great, everybody. I'm going to stop sharing my screen so I'm able to grab this and give you all the link so you're able to find that as well. I want to make sure you have all of this good information. So it looks here like there are 5-year, 10-year, and 30-year terms.
Yep.
Okay. And the inflation index ratios can be used to calculate the inflation adjustment to principal on previously issued tips. Okay, so and tips can be held until maturity or sold before maturity. So are they kind of like iBonds where if like there's a penalty for selling them early or anything like that?
There might be, but in this context, I'm talking about using them in ETFs. And so I want to say it again. This is entertainment and educational purposes only. These are not recommendations. These are not endorsements or anything, but I will give one of the ticker symbols because I know Opal's asking for it. Mm-hmm. Type in TIP, TIP. And that is the iShares tip. They're the iShares tips bond. Cherie, I don't know if you want to pull this up or not.
Yeah, I can.
I will put it in. Should I send it to you or put it?
I might have it here. I pulled it up through. I
just sent you that. So.
Okay.
Now it's not paying 10%, right? But again, tips are backed by the United States government. And so you have these investment firms that will buy these bonds and again, put them in these buckets and then split up those buckets and then sell them to people that are buying them through brokerage accounts.
And this is by BlackRock?
Yes.
Those thieves?
That's why I said it's no. But here's the thing, BlackRock owns iShares. iShares is one of the biggest ETF providers on the street.
Yeah, look, I'm sorry, BlackRock. If you all ever decide to help fund the 10K project or Black businesses, etc., I didn't mean that. I'm a lovable person.
Listen,
I just would like you all to try to make sure that the little guy can buy his or her home. That's it.
They don't care about that. They only care about the investor returns.
then we should make money off them. So everybody, this is an option here through the ETF. You all are able to come, and let me make sure in the chat that
And actually, you know what, Cherie, I'm going to give you a different one. I'm going to give you a different one. So when looking at these things, expenses matter. Okay, expenses matter. So the expense ratio over here is 0.19%. Now, I'm going to send this one to Cherie as well, if I can find it. Oh, there we go. I want to look at the Vanguard one. So Vanguard has one as well. And so a lot of these things are kind of mix and match, right? One big, like like BlackRock, iShares, Vanguard, they're like the two biggest money managers on the globe. So they do a lot of the same stuff. But the TIPS ETF that Vanguard has a 0.4% expense ratio. So
that's a good thing for you to highlight. Yeah.
Right. Anytime you can save money is a great time to save money, right? Because the less money you're putting out, the more money you're keeping in your pocket, your wallet, and your pocketbooks. So
yeah, and Vanguard is still a well-known company, and it's, well, I understand it's a stable company. So
stable is on any given day. Vanguard has the most assets, or I keep saying IROC. BlackRock has the most assets, and some days Fidelity might have a lot of the assets too, but they have the most assets in the world.
Okay.
So, but you can look again. I should have brought this. If you think about stable, good financial planning principles, right? If you think about a pyramid, the bottom layer, the foundation, just like a house, the foundation is cash, are things that are risk-free that can help you fund your day-to-day activities. And then as you go up that ladder or that scale and that pyramid, then you have things that are a bit more risky. So the next thing might be bonds. The next one up might be stocks. The next one up might be options or some kind of commodities, derivative contracts. At the top of the list, you might say crypto is there, but they all have a mix, and you want to make sure that you're not overexposed to any different one. But remember, personal finance is personal. Again, personal finance is personal. Cookie cutter solutions do not work for anybody, and it usually gets everybody that uses them in hot water. So keep that in mind, y'all.
Yeah. Stephanie is asking, does Fidelity have tips as well?
They might, but you could always buy the Vanguard tips through Fidelity as well.
Through your brokerage account.
Yeah, it's just a brokerage.
So the great thing then about the ETF is that you are able to, it is liquid.
It is liquid.
You just sell it at any time, and it's dividend then, right? It produces dividend?
Interest. It will produce interest.
It produce interest.
Yeah.
So, so everybody, a few weeks ago, we had Shane Skeffrey come on and talk about how to diversify your portfolio. And one of the things he talked about was you want to have, depending on your age, obviously, and the mix you're looking for, you want to have some cash flowing assets.
Absolutely.
And some appreciating assets. Again, different mixtures for different people. So it's personal, like Camari is saying, but this, is one of the things that could potentially fit into your cash flowing assets because you're earning interest on
Absolutely.
it.
Absolutely.
Yeah. So Charles is saying, need to get my dividend game up. Me too, Charles. Me too.
Well, we're going to talk about that. We're going to talk about that too. I got one more for y'all.
Okay. All right. And
I'll
then
say
Opal is saying, oh, hold on. Opal is saying Fidelity is showing the iShares one. So, hey, you could choose to do that through Fidelity. Yes. Okay. So we have read everybody's comments. Go ahead, Kamar. You have something else for us.
So what I was going to say is that it is in the market, right? The asset, it has an underlying asset, which is backed by the U.S. government. However, you have to understand how the market works. Stock market works on an auction system. So you normally won't see a whole lot of fluctuation in these, not a whole lot. However, it's still a market-based product, and you can see some fluctuation in them. So I always just like to warn everybody when we're talking about this, about the, the characteristics of the investment. So if you see it drop one day because something crazy happened, don't freak out, because the underlying asset is backed by the U.S. government. The U.S. government has never missed a payment. So you might see a dip on one day, nor more than likely it will come back and will rebound. And if it doesn't, that means we have way more problems to deal with. We're probably approaching a zombie apocalypse.
That means that your cash is not going to be as useful.
It won't be useful at all.
As your pew pew that we've been talking about. You need to join the National Association of Black Gun Owners. Oh goodness, always be on defense, people. Always be on defense. Okay, so you have one more for us?
Right. So I believe it was Charles that said he needs to get his dividend game up, right?
Yes, it is.
So here's another ticker symbol. It's another ETF. PFF. PFF. So PFF is an ETF that buys preferred shares in companies. And preferred shares are different than preferred stock shares are different than your typical stocks that are on the market. They don't fluctuate as much. If click on the 5-year, or the max, click on the max. Now, if you look at that, it was $50 back in like 2008, 2009. It's now 32, but it's paid a substantial dividend. Now, you did see that crash. I'll tell you that crash was probably March 6th in 2009. But then as you see, it came back up.
Yeah.
It's come back up. And when you come back up and when you look at it, it's been in a pretty much stable range. But this is what I'm talking about. This is a great example of what I'm talking about, where you have market-based investments that will do crazy things sometimes, but it's backed by a sound asset. So it kind of trends in a range there. It doesn't do a whole lot. Now, again, I wouldn't put a whole lot of money there if you don't have at least a year's worth of cash set aside. But everything over that year, I would start looking at, things that are income generating. And let's say you don't have a year's worth of stuff in a stash and you're working on it. You can start buying this at, say, $25 a week or $50 a week and start the dollar cost average into it. But I'm never a big fan of just rush in, deploy all your cash, because your cash is what helps you keep you stable through all kinds of turmoil, all kinds of crazy times, and it will help for you to keep your head on straight and not go crazy. I've seen it so many times.
This is a dividend stock here?
Yes. So it pays preferred.
Maybe
no, go ahead.
Like here. I was going to say, how do we know how much dividends they actually...
Scroll down. I believe it's 4 or 5%. I don't know. It's on the side. I can't see it.
Okay.
Dividend yield. That was blank.
Dividend yield. It's saying, it has a dash there.
Yeah, that's
maybe it needs to be year to date. No, it still has a dash there. Okay. I guess maybe we need to look at it.
So anytime you're looking at any security, always look at the fact sheet on the actual website. I'll send you that real quick.
Yeah.
Now, Cherie, you might not like this one though.
Why would I like?
You might not like this one though.
Like it? Oh my gosh! Don't scare me.
Because they're the ops, right? We've identified. Yes, ETF DB is a great website.
Oh yeah. Yeah. Well, I could tell because it says iShares. Yeah. So
yes, it's iShares. Yes, it's iShares.
While you're pulling that up, or did you give it to me already? Yeah.
I just gave it to you. Yeah.
So let me come here, and I'm gonna make sure that everyone has this as well, so you all can see this.
Again, this is for entertainment and education.
Okay, so yeah, this is iShares again. And you have the price here, you have your expense ratio, and am I going to get?
It pays a 5.14% dividend right now annually.
Where do you see that?
That's at the bottom. Did you click the link I sent you, or?
Yeah, this is
Yeah.
the link that you sent me.
Go to the bottom.
Go to the bottom. Okay, key facts. Okay, and
Keep going.
keep going down.
Portfolio characteristics. Up. Go back up. Go back up. Go back up. Up. All right. 30-day SEC yield.
Okay, right here. This 5.14.
You got it.
Okay. All right. So I hope everyone sees that I have it highlighted here, so that way you're able to come back. So let me ask you this: does every dividend producing ETF have these portfolio characteristics here?
Every ETF has these characteristics.
So what we're able to do, everybody, is when you're doing these, you could pull this up and do these comparisons based on the portfolio characteristics.
And you could also use that ETFDB kind of as a cheat sheet or a quick guide as well, because it'll have a lot of stuff listed there. But it's also riddled with a whole bunch of ads as well. But if you click on holdings. Okay. Yeah, on the top right. No, yeah. There you go. So those are the companies that they own. But these, again, they're buying the preferred shares in these companies and not necessarily the readily traded everyday shares that you see quoted on the stock market. It'll be very much financial heavy, utilities heavy,
those dividends.
Right.
Yeah.
And they're typically older companies, more seasoned company. Like that one right there, Kick AR, is a financial firm, AT&T. So if any of you all own AT&T, it's right there. AT&T actually pays a great dividend, but they've been getting smacked around.
I heard, didn't AT&T just reduce or not give a dividend for a quarter or something? Was that them? I thought it was some telecom company.
Anything is possible.
I don't know why I thought it was AT&T. This also, going to Charles, if you are looking for like a place to start finding dividend producing individual stocks, starting here, knowing that AT&T and Wells Fargo and Capital One and all of these companies actually have dividends could be a great place to just start your research as well. So
another place I would suggest, because here's going to be the preferred. So if you try to buy the preferred, you might be a little unhappy. But Dividend Aristocrats. There is a Dividend Aristocrats ETF. What is the ticker symbol? I'm trying to find it now. I can't think of it off the top of my head. I believe it might be another iShare one, and I believe Vanguard. Let's stick with Vanguard. I don't want you to get mad at me.
Oh my goodness.
I don't want you to be mad at me.
I won't be mad at you. I might be upset, but I won't be mad.
VYM. If you look at VYM. So VYM.
VYL.
Victor Yield Mercury.
I see VYM.
Yep.
Yeah, VYM here. Okay. Want to make sure I've got the right page here.
And that's a Vanguard high yield dividend.
Oh, I have purchased this before.
Yeah, if you look at the holdings on this is a great place to start. If you're looking for dividend investments. And they should give you the top 10 holdings. They usually do that. Okay. If you scroll down a little bit, I'm not on the page.
All right, here we go.
Yeah.
So you've got the equity, Johnson & Johnson, ExxonMobil, JP Morgan Chase, etc.
And these are all stable $1-gajillion dollar brands. Johnson & Johnson has between Johnson & Johnson and Procter & Gamble, they have so many $1 billion brands, it's crazy.
Yeah.
So you might not see the actual stock price run up, but really, really heavy, but you'll see a consistent dividend for the most part.
Yeah. And there are 443, it looks like, in this basket of stocks here. So I don't know, for some reason, 11 to 20 is not showing up. But anyway, you're able to play with this, everybody, and see what's here. So I'm going to make sure to give you all this as well as the URL. Yeah.
And I see
I will
Felicia.
say again, this is just Cherie and what I do. I'm a big fan of taking $25, that I would spend and forget that I even had it, and just play around with buying it and see what happens for me, I would see what happens in my portfolio over a 3-month period, just for the experience of being in the game, in that ETF, in that stock, etc. Or getting the ping, you've got a dividend, going, oh yeah, I forgot I bought that thing. So and these days, a lot of companies allow you to buy fractional shares. I don't know if any of these companies do, but on a lot of exchanges, you're able to buy fractional shares of certain stocks. So
And if you have a brokerage account, just about all of them do it. Even, I'll show my public Cash App account just on my phone. I'll say, hey, you can buy stock for $1. You don't need $1 million. I know everybody's kind of getting excited about these stock splits that we saw Google have and Shopify and Amazon earlier this month. But hey, if you have $1, $10, $25, you can log into Robinhood, Cash App, any of these other apps and buy a stock as well. And some of your bigger brokerages as well. So there's no barrier to entry.
Yeah, there's no barrier to entry. I'm a big fan of that. And that's a great thing, because 50 years ago, there were barriers to entry that we don't have today. So,
Absolutely.
Felicia is asking, is there an ETF to buy housing companies? So is there a real estate?
Yes, there is. Come on, we're going to go back to the company you like, right here in my backyard in Philadelphia.
BlackRock?
No, Vanguard.
Oh, Vanguard. Oh, I thought you meant BlackRock.
I'm trying to stay away from them as much as possible now. I don't want no problems.
And while you're pulling that up, Charles is saying, wow, cheat codes. So look, everybody needs a place to start their research. And I think that that's one of the things that sometimes is a little irritating with hearing some of the lessons that are out there, especially on TikTok, is that they can't really go through like step 1, 2, 3, or give you a real place to start. So, that's why you come here for some longer training. And Latrice is saying, yes, I love the dividend emails. Yeah.
It's a dividend email?
Your little $5 investment,
gotcha.
Made 2 cents. I'm like, okay, I'll take it.
Right.
Charlie,
but you know what?
How can I sign up for those emails? So whenever I invest in something, I invest, for example, I have a stash account personally, not financial advice. I'm not telling you to get one. It's just easier for me. It's one of the places that I have some money. What will happen is when the dividend hits my account, it sends me a message saying, hey, you own this stock and they've just released X amount of, for me, it's pennies or coins or whatever. And that's how I get the email. So, but for you, it may be that you're invested in, was it TD Ameritrade or some other platform like that. So
I just gave V&Q, which is real estate centric. Okay. I believe it was Latrice, right? If Latrice wanted an actual home builders ETF, there is one.
And I'm going to make sure everybody can see it. Let's see here. Share the screen.
So and this one,
we're in the United States, and I'm an individual. Should be telling them all my business. And select the site. Is it the ETF site?
Yes.
Okay, and
Now this is the
I
state.
don't like all of these cookies, so save my cookie settings. Let's see here, targeting, make sure that's off. Yeah. All right. So this is the Home Builders ETF, the Spider S&P Home Builders ETF. Okay. So they have here, the price is now $54.70. You have the expense ratio of 0.35. Is 0.35 high
Uh, it's in the middle.
to the middle?
It's in the
Okay.
middle. I mean, every asset class is going to have a different expense ratio. So, for example, when we're looking at the tips, they're bonds. Bonds don't really take any management. So these major big firms don't have to charge a whole lot of money to do it.
Okay. Let's take a look at the holdings here.
Now, this one you'll notice, right? You have Lennox Tran. Tran is they do like appliances and things like that. So it's kind of home builder adjacent. It's right next to it, but it moves lockstep with it. Same thing for Carrier, same thing for Home Depot. But Lennar is a builder. Toll Brothers is a builder. I want to say Pulte Group is one also, but Whirlpool, we all know they make appliances. So it's not an exact science, but they get pretty close.
And this is not dividends, right? This is just.
No, I'm sure they pay a dividend. If you scroll up, it should tell you, let me see.
Okay, go to the top here. Do I maybe look at the fact sheet?
Yes.
Okay.
You'll probably get to it faster.
And
so look at that 30-day
I
SEC
see here,
yield.
30-year, okay. 30-day
Yes.
SEC yield is 0.81%.
Yeah, it's less than, but they're getting smacked around. So,
Yeah,
and we know what's going on in housing.
Yeah, housing is interesting. You know, you keep hearing that there is a supply issue with housing and with the materials, but then, you know, you're seeing that the price is going up and down like crazy. So,
Yep.
yeah,
Well, a lot of
for the
people don't.
faint of heart.
Well, a lot of people don't realize that the stock market, right, is probably the greatest experiment in human emotions. So when you have companies that are trading on the markets, it's not just based on the fundamentals. You also have to factor in people's emotion, and people tend to get fearful. Sometimes they get greedy, and so anytime people get fearful, they sell. Anytime they get greedy, they buy. And so right now, everybody's fearful. High interest, high inflation, got wars going on. So a lot of people are in flux and they don't know what's going on.
Mhm. Now, we have one more question. I want to make sure everybody subscribes to Camari's YouTube channel. So I'm going to come here.
Thank you.
This is Camari's YouTube channel. He also has his Instagram that he's active on. Are you active on Facebook too?
I am a little bit. You can find me everywhere at the Finance Rebel.
The Finance Rebel everywhere. This is Camari here.
That's me. I'm not hiding.
He's on live at least 3 times a week, you know, and he has all sorts of topics he talks about, very much about Black wealth, Black income, Black investments, etc. All sorts of topics on here. He's not afraid to talk about some of the controversial things as well, but he always loops it back to money, which is one of the things I love, because I believe 98% of what we're talking about, it always comes back to economics of some sort. I also believe that a lot of the problems that we have in the Black community, I would say 80% would be solved with either increased income and or increased wealth. So,
you know, that's kind of why I got into this, right?
Mm-hmm.
But I don't believe that anymore.
Oh, so what do you believe now? Now you have piqued my interest.
So just to give context, right? My dad was an accountant. I wound up becoming an accountant, but again, financial advisor. I won't run you through all that, but the reason why I kind of made the decision to go into that and like study money from various aspects, whether economically, financially, accounting wise, is that we've always had issues with money. And I was like, well, wow, if we could just fix the money issue, everything else will go away. I don't believe that anymore. What I believe is we've suffered great oppression from our government and political systems, but we also have been, I don't want to get too political because I know you don't like getting political, but.
No, I actually don't mind the politics.
Okay.
So, yeah, go ahead.
But we've been, to quote that famous Public Enemy song, rather our name, rather our religion. I can't remember the whole Khalid Muhammad's title, but we've kind of lost our minds and we haven't gone back to regain it. We've suffered generation upon generation of trauma that we've never got healing from. And so if you're constantly under trauma, constantly under duress, how can you really think about money? And I know somebody's going to probably say, I'm being an apologist. I'm not. I'm just looking at the whole micro view. For some of us that were privileged, right, because I consider myself to a certain degree to be privileged to be able to think about these things. And I can see clearly through them. But for some, they didn't have that opportunity. So it can be kind of rough. I think if we can just start loving each other, we can get to the money. We can see the value in education. We can see the value of a lot of things, but if we don't love each other. I mean, when you look at the rates of Black business spend from the Black community, it's 2%. How is it possible that only we spend 2% of our money with Black-owned businesses? And there are plenty of businesses, and I'm sure everybody has heard stories. That business did me wrong. That business XYZ, that I'm not going to Black businesses anymore, wholesale. But every other community has raped us, pillaged us, and we never say wholesale. I'm never going to I'm never going wholesale to a Jewish accountant anymore. I'm never going to a Jewish lawyer anymore. I'm not going to use, an Italian Mason anymore, right? Just kind of going to some of the centers of money that each group has kind of flocked to. We don't say that, but we always say that about Black businesses a lot of times. I know it's not everybody, but for this conversation, we're speaking broadly. That tells you something. And so if we could get over this sickness that's been put upon us and reject a lot of the nonsense that we have accepted, I think we could do a whole lot more with our money a lot faster than actually studying money. If that makes sense.
So I can definitely understand your thoughts around coming from a place of privilege, and how many of us are impoverished and going through trauma on a daily basis. I do also believe that, and I'm going to do a show on this at some point. I believe there's a lot of resources that we don't tap into. Some of it is because it's not promoted well. So that's one of the things I want to start doing. And some of it is because we spend a lot of our time on social media in rooms that don't uplift us or YouTube channels that don't uplift us. So, and we see that through the numbers. I'm just going to say YouTube, for example. If I'm looking at you or Diamond Dave or Ericka or the 10K Project, Earn Your Leisure is probably the only one that kind of reaches that threshold of numbers of people.
They definitely reach that threshold.
I'm sorry?
They definitely reach the threshold in terms of numbers.
They have. They're the only ones, though, that I see like really reaching that consistently. Versus, I'm not going to name any names, but, and I know people want to be relationships and all of that, but love don't pay the bills, and if your economics aren't right, then it is hard for you to have a good, thriving relationship. Or celebrity gossip or things like that. I just think that all of us have 168 hours in the week. And that, yes, I might be able to focus on my, upward trajectory for 100 of those hours, and you may only have 20 of those hours. but I'm going to throw a biblical reference in there. You know, oh, now I'm forgetting the biblical reference, but it's all about, you know, you have to take little in order to make a lot. That's not the exact Bible verse I'm thinking of. What are you doing with your 20 hours in order to help move yourself to whatever the next milestone or level is for you? Are you, God gave us talents, for example, and the hours that he gave you are represents that, you know, are you taking that time to better yourself, or are you, you know, are you not? So
Right.
I understand what you're saying. I'm still of the camp of,
But can I ask you this? Are you familiar with Maslow's hierarchy of needs?
Mhm.
So most of us are in the whole psychophysiological stage, and we're not safe mentally, emotionally,
Mhm.
financially. How is
Sometimes
it?
physically.
Yeah, I thought I said physical, but yes,
Mhm.
absolutely. Also,
Yeah,
sometimes physically.
yeah,
It's really hard to give brain share to those things that you're talking about. And again, you are 1000% right. Right? It's not even an argument. You know, I hate that we try to have these black and white ones and zeros type conversations like it's all or nothing, and
mhm,
it's usually somewhere in between the middle. I'm just saying that, you know, a lot of us, it's hard for us, as a lot of us, because we don't have our basic needs met. And so to try to use 50% of that 168 hours that we have, or 10%, it's a struggle for a lot of people. And
yeah,
that's why they gravitate towards the nonsense, right? They gravitate towards, I think Charles put there, McDonald's and baby daddies and baby mamas too, right? To be fair. So that's why a lot of us, we love that stuff. But when it's something of substance, it just kind of gets brushed over. So
yeah, yeah.
I get it. I get it. It's
Yeah,
a
we
very,
probably could have a 2-hour conversation
and we should. We
about
should though.
this, where, but I think that this is an important topic to have.
Mhm.
I am speaking with some people with regards to the controversial topic of should wealthy Black people invest in the hood. Um,
A lot of them do though.
well, that's going to be my point. But there are reasons why you don't hear about it. And we need to stop begging. First of all, LeBron, Serena Williams, you know, they do invest in Black people, but they're not going to build a grocery store in the hood. And I think there are economic reasons for that, you know, which I'm going to try to
Yes, they
break
do.
down as simple as possible during my conversation with the specific group that I'm talking to. But there are a lot of wealthy Black people who will invest in individuals of all parts of the economic spectrum
If they see talent
if they
and
can
merit.
see an ROI on their investment. And an ROI doesn't necessarily mean money, but it does mean, am I going to, if I take 10 hours to mentor you, am I going to see an improvement in your life? Do I believe I'm going to see that? If I don't believe I'm going to see that, then I'm not going to invest 10 hours in you. So a part of the other side is to have that person who may be in a physically dangerous area, mentally dangerous, you know, they're trying to make it, to see that shift of there are wealthy Black people who will help you if they can see a return on investment. And each of us has to put in 50-50 on this.
I
So
mean, I love it. I agree. I actually hate the commentary. We need rich Black people to take care of us. I don't know if anybody,
drives me crazy. Yeah, if we could get all of the celebrities and the basketball players to just put in $1 million each, you know, we could. I'm like, oh,
but
it's
they don't
half.
realize if you just take $100 amongst us all, we can do a collection and do some of the
That's the
same things you're
10K
talking
project.
about. Right.
But here's the thing, and this is my controversial thing, and then I really do have to go. Let's say grocery store. or any kind of, let's take a grocery store in particular. There are three main issues that have to be dealt with. Number one is
Inventory.
theft,
Theft,
employee
yes.
theft. Number two is consumer theft. We have to believe that, because Whole Foods closed in a certain part of Chicago because of all the theft. If Whole Foods can't make it and each of us put in $100, we can't continuously put in money because of the theft. So that's one thing.
Excellent point.
Number two, this is I'm going to have to cut this out of the video, but I really do believe that a lot of wealthy people are not going to put grocery stores in the hood if they think that the next BLM, what do you call it? Something happened, a BLM march happens and it's going to turn into destroying the business. The third thing is everything is more expensive in the hood. So if we put all our money together to put the grocery store in the hood, the insurance in the nice part of town is less than the insurance in the hood. So we're like a grocery store already has 3% margins. And, now you're like compressing that. So what I'm trying to say is there's a lot, there are quite a few reasons, I won't say a lot, there are quite a few reasons why you're not seeing some of the investments.
You didn't even hit the big ones.
In the hood.
You didn't even hit the big ones. I mean, those are big, but they're bigger ones, right?
Yeah.
I know a pretty big grocer in the Philadelphia area. He's not black, he's white. And he'll say, sometimes the margins are less than 3%, but you need cash or credit to get the inventory. So that's a major hurdle right there. Then you need to be able to staff that store. And that's, again, another major hurdle. We're talking a big grocery store. Obviously, we can do a small bodega, what we call poppy shops here as well in Philly, but
you still have to deal with the big stuff that I had talked about.
Oh, yeah, absolutely.
Yeah. So with that, I really do have to go because I have another meeting to go to.
Me too.
Controversial topic, I know, but if we're talking about being real investors and really going into the community over time as a 10K project, these are real conversations we're going to have. Right now, though, I am looking at, okay, how can I and how can Tawana and how can we as a community help people who want to take their 20 hours and do better? Can we help them go from a $35,000 a year job and on food stamps to $70,000, $80,000 a year? Don't need food stamps. Their kids can get into a better school and that person can have a better life. Can we help 1,000 people do that? I think yes, we can.
I agree.
So that's it for me, everybody. I saw the chat light up. I am going to read through the chat once I'm done with my meeting so that if somebody said something I need to respond to, then I'm able to do that. But have a happy 4th. Thank you, Camari, for coming on.
Thank you. And I'm inviting you on to my show to talk about what the wealthy or not wealthy should do to make the Black community better. So
okay, well, look, as long as I'm not going to get kicked off.
I'm not going to kick you off. Listen, I'll say this, and I know you got to go because I got to go too. We need more dialogue, and we don't just need mindless dialogue. So real exchanges, challenge each other respectfully, right? No name calling, nothing like that. But, have a real dialogue, and that's what we need to go off each other. So thank you again for having me.
I will take you up on that. I'm going to email you and we'll schedule a time because I think it's important. As we have as the midterm elections come up, reparations always comes up as well. And I have controversial things to say about that.
Oh, so, yeah, let's
we can have a couple of controversial conversations over on the Finance Rebel.
I love it. Thank you again.
Thank you so much.
To everyone.
Take care, everybody. Have a good weekend. Bye-bye.